Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Monday, January 16th, and happy Martin Luther King Day to all of the U.S. who is enjoying the holiday off. For one of the great civil rights leaders. The U.S. markets are closed today. Does not mean crypto or the international markets are not pumping. Well, I guess pumping is the wrong word. In action is what I should say. But we do have the dollar index. We do have equities futures rolling. And of course, we do have crypto. So plenty of inferences to make, although I would expect more of the fireworks to maybe occur this evening or tomorrow morning, depending on any volatile expectations. Now, the reason we're starting with this chart again is the simple fact that I noticed this same exact pattern last night when we rose up to levels that we saw late yesterday. And it's a little bit less exact because of how the CVDs have normalized, but basically perps led the rally from my view yesterday up to that 21.4 21.5 trigger and then sold off, and we're doing a bit of the same today. Perps are leading up. We have a giant wick up to the low from yesterday. That's where the rejection was at 21K, pretty much flat number. And so Bitcoin really needs to make it above 21K to have another chance at 21.5 or higher. And the reason, of course, I wanted to start with this is because perps are leading. Pardon me, spot isn't exactly following. Doesn't mean it can't occur, but the fact that this is, more or less a betting-driven rally rather than a spot-driven rally, and if you even want to call it a rally, I mean, it's been rallying since the U.S. market opened, but this does look a little precarious to me, and I would want to see a little bit more spot follow through before I'd started thinking about longs higher. So that's just good consideration before we dig into the rest. So the dollar index, on the daily chart has creeped lower. It opened lower, has gone a little bit higher today. We were really expecting this catch at right around 101, potentially all the way down to 99. I would expect, I'll go ahead and draw this line just because I think this creates a decent window of opportunity if DXY does head lower. So if DXY is heading lower, I would expect all risk assets to move higher in that scenario. And of course, if we end up moving higher back and reclaim the 103 low 103 area support level, currently acting as resistance, then that would be bearish for risk assets, equities, and crypto included. So, we did get our obvious DXY trade, and that's obviously when crypto and equities, had a lot of fun. But now we look to be getting into an area where we might see a little bit more volatility, or a little bit less volatility, potentially some flattening, but we'll of course look for a rejection at the 102.6 level to potentially end up heading lower throughout the week. I think everybody would like DXY to head lower throughout the week. It would give risk more room to run and allow a little bit more profit to be had in the bullish direction. So fingers crossed there. Looking at equities, and I know this chart isn't that sexy. It's because it's quite this long range for nearly all of December. So where we're sitting at right now, and actually I'm just going to zoom out to the 4-hour just to make this a little bit easier on everybody's eyes. I know I've got a lot of support and resistance levels, but they've all come in handy at every single point of the move, so we're going to keep them there. So 39.88, what I told the crypto or the Trade the Chain community, is a very key level for equities. If you can stay above 39.88, you've got a pretty strong possibility to get back above 4K and then zoom higher to that 40.40 level, potentially all the way up to 4,100. If you lose 39.88, you've got one little bit of support for a potential catch at 39.77. Else you are headed back down to 39.50, which would be deviation above the range, and then you're back into 39.50 and 39.88 as your range, and you need to get above 39.88 or below 39.50 to break out. So I'm expecting 39.50 to catch if 39.88 does fail. But of course, it's too early to tell that 39.88 is going to fail. We still have DXY, still more or less in a decision-making zone. I could definitely head higher, but it's currently sitting at resistance. And, equities are sitting at support right now. So until we get a confirmed break, it is a no trade for me. If I get a break above 44,005, that's a long. If I get a break below 39.88, that is a short. So good context there. So looking back at Bitcoin from the hourly charts, we can see, real resistance is 21.5. We made it to 21, just above 21.4 on Binance last night. And then 20.6K is support for this range, which we tagged early this morning as well before heading higher. So just so you know what the colors are in on my charts that I've changed up a little bit. We have the 200-day moving average sitting around here somewhere. Oh, did I actually get rid of? Oh, I actually don't have the moving average on this chart for some odd reason. But we do have the VWAP, which is more significant than the moving average at this point. Anyway, so the blue line is the VWAP. This is the weekly VWAP, and you can see that trading above the weekly VWAP was quite bullish going into, pretty much for all of last week. We also have these bands on the VWAP, and this is kind of like a hybrid Ichimoku cloud, where you can see where price tagged the cloud and ended up moving higher and leading that momentum. So that does look like the momentum's kind of drained a little bit. We had a weekly or VWAP reset yesterday, as happens at the end of every week, and now we are back above the weekly VWAP. So if we can get back above this cloud and start bouncing on this cloud again, that is going to be very bullish for us. But we need to get above that cloud first. But staying above the VWAP is a very good sign. So the VWAP right now is exactly at 21K. So 21K is even more important than 20.6K right now. If you can stay above 21K, I'm sorry, if you can stay above 21K, you have a route to 21.4, 21.5. And if you can get above 21.5, you have a lot of room to run all the way up to 22.5 and potentially higher, depending on where momentum drives. So stay above 21. I got room. Stay below 21, you need to hold 20.6. There is no long or short in my book until you break 21, until you confirm a break above 21 or you confirm a break below 20.6. Else you are just ranging, and you should be longing support and shorting resistance until you have a break in resistance or support. And that's just the simplest way to trade this range, unless you really love your scalping skills, which we could dig into. And of course, if anybody has questions, I can answer them. But at this level, unless you really know what you're doing, short resistance, long support until you see a breakout. For Ethereum, it's basically the same exact gist. Short, we have supports at 1600. We have resistance at 1600. We have supports right around 15. I've got this line here based on, a trading range back in November, but I didn't exactly tag it, so take 1500 with a grain of salt, maybe more like 1505, 1510, but a confirmed break below, 1500 for me, that's a short. A confirmed break above 1600 for me, that's a long. Anything that, if we start to get overbought or oversold into these levels, maybe look for a long, but wait for confirmation. Don't just, if it taps the level, don't just start longing and trying to catch knives. Look for consolidation, look for volume coming in, look for those key triggers. It's a Monday, the US markets are closed. I wouldn't expect a breakout, in either direction today. Of course, we could get one maybe heading into the daily close, because then people are starting to think about what's going to happen for markets opening tomorrow. Do I need to take a position, et cetera, et cetera. So you'll probably see relatively muted action, I would think, into 4 p.m. Pacific or 7 p.m. Eastern, which is when the daily will close. So I have a feeling that if we cannot break above, 1600 or break below 1500 on ETH and same respective levels for Bitcoin, then we'll probably get some sort of move into next week. And now into next week, we don't really have anything important on the calendar. There's really nothing here that is significant to me. So, looking from a psychological perspective, this is good in the sense that CPI came in where we want. Fed is thinking about 25 basis point hike or lower. Potentially, that's kind of the signal that we got. And unemployment, wage inflation and unemployment aren't too big of an issue right now from the Fed's perspective. So when you kind of tag all that together, we're not really expecting any bad news next week. We do have financials, or this week, I should say. We do have financials reporting, but that shouldn't affect crypto and equities too much unless the banks give a really negative outlook in relation to their business opportunity based on the federal funds rates and inflation and all of the fun stuff that goes into the economy. The banks seem strong from what I could tell. We could, of course, get a shock this week, but as long as the bank earnings are decent and not, bearish and negative and, doom and gloom, then I have a feeling that we'll probably end up continuing higher this week. And then kind of, figuring out the next stage around the FOMC meeting, as well as tech earnings, which should start next week heading into February. I think like Apple's February 2nd. So we'll get banks and finance, then we'll get, consumer discretionary and, some tech companies. And then as we head into the very end of the month is when really the fun should begin. So preliminarily, we should continue to have a fun January based on, the good news that we have and the lack of, potential bad news in front of us. We should have, 7 to 10 days of good fun, if you want to call it that, to likely continue higher. But I would say wait for the daily close today if you want to position long, because you'll get a really good signal. Because yesterday the daily close happened, we moved higher, and then we were immediately rejected back to the range lows. That's not surprising for Sunday heading into a no trade Monday for the US, but you can see that the indication is still bullish. We didn't get a strong rejection. We caught immediately exactly where you wanted to catch for pretty much all major assets. So something to consider. I'm not very bullish yet. The moral of the story for me is, break one of these levels, and then we likely have, the next trend in front of us, which would be either, continue higher and bring momentum higher, or bring that momentum back towards, maybe 18K, 19K. I'd say 19 to 18, this range down here where we traded at, before the big zoom would probably be a good catch level. So until we get a signal, we will wait. And I will say this, rising higher, spot is not caught back up. I'm cautious into this, and my opinion. I'm maybe, unfortunately I was not awake during this time. I slept in a little bit due to not feeling as well as I normally do, but 20.6 would have been a good long opportunity. Without that, you could maybe short 21K. Again, perps are leading spots. We're getting caught there. So if it flips above 21K, it's probably a good long. If it cracks below and gets, beneath, probably beneath 20.9, might be a decent short down low. So, but again, no trade until we have confirmation. For me, it was a very, very, very good week last week for, equities and crypto and everything. So there's no reason to wake up today, on a day off of the markets and start longing everything, in their mother. Wait for the confirmations, wait for the signals. You don't have to trade every single day. And a lot of people, this is going to be a very, what they call PVP area. This is going to be big not big market makers, big hedge funds, high net worth individuals battling it out, trying to, lift higher above 21K. Someone sees that, tries to stuff them down. It's pretty much exactly what we had happen last night. And I would be, I think you'd be a little bit crazy to think that doesn't happen at least a few more times. I mean, we are at levels where the world is excited about crypto. We definitely have room to head higher, and we have the means to do it. But, faking out people, using 100x leverage, 50x leverage, 20x leverage, any leverage is the name of the game. and taking their money off the table is the job of the person on the other end of the trade. So be careful, wait for your confirmations, and potentially wait for the daily close today or the market open tomorrow to see where things push after a quiet weekend and a brand new week for trading. So good luck, happy trading. Speak to everybody tomorrow, and fingers crossed for more bullishness, but more cautiously optimistic at this stage. There's no reason to get too excited or start bull posting at the yin yang like your least favorite crypto influencer. So talk to everybody tomorrow. And if you're not in the Trade the Chain community, come in, sign up, 14-day free trial, feel free to ask questions, engage, get some trade ideas. We're always happy to help and are always helping Monday or morning, noon, and night. So good luck and happy trading.